Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep, sponsored with Israel, Joel, Elconin, and Dennis Dick. All three of us are fired up this morning, I think, for different reasons. So between that and between the earnings and the Fed and Beyond Meat, we're going to have a crazy show. Our guest, I am super excited about our guest today, folks. Something different for us. We're going to be joined by one of our listeners, Yvonne Shore. She is a trader, but it's not so much what she does as much as it is why she does it. She has a very interesting story as far as why she started trading and what she needed to pay for with her trading winnings. And we'll be joined by her at 8:35. She has a very, very touching story. So that'll be today's guest. But like I said, we got a lot of news today, and we're all fired up here. So let's just jump right in. Joel, what is happening here overnight?
We got a nice rebound here. We're up $1.75, well off that pre-market low. 29.84 is where you're trading. Pre-market high 89.50. My area of interest here is going to be 29.95. We popped up there late day yesterday a couple times and failed. So that's where I'm looking. That's my resistance. On the downside, I'm looking for us to come back halfway at least of this move from this morning, maybe come down to 29.78 and take a little pause and see if we go back. The low from yesterday way down at 29.58. Your pre-market low at 66 1/4. Crude not liking the dovish, hawkish Fed here, down 87 cents, 57.71. You have gold not liking it either, down 21.50 at 14.1620. Silver slipping under $16 here, down 42 cents at 15.98.5. Triple D, I just don't know where to start, but I know you're fired up about Beyond Meat.
Yeah, we got to start with Beyond Meat. I mean, and maybe we should start with the Fed. Maybe we should start with the overall market. There's a lot of other factors here, but this Beyond Meat story is just so interesting that I've never seen a discount. First of all,
that is just speechless.
Yeah. So okay. So 220 gets announced the other day, right after the earnings report. The stock is at 220 because it was right on it to look at, when this was announced. They announced the secondary, and the stock immediately falls to like 195. So it was 220 when they announced it. They priced this thing last night. There obviously wasn't much interest at all to have to price it this low. $160. I've never seen a discount, 60-point discount to where the stock was trading when it was announced at 220, down to $160 they priced this thing. So anyways, if you did participate in this offering, at least as of right now, you're up 18 points because you're going to get this allocation. I think they said August 5th, and I guess that's the deal here is because it's still 4 days away. And it is leaking significantly here in the pre-market. Typically, these things like to pull down to the secondary pricing. I'm not sure that's going to happen in this case. There's so many other factors involved. What are your initial thoughts here?
My initial thoughts is that they had to go pretty darn low to get people to take it off their hands. And I think that's the company just making an evaluation of where it is. And, that's what they think. That
the market makers are involved. It's all market makers. So they come in. That's the way the secondaries work. They put the feelers out there. I know, quote the Raven tweeted out he actually got it from his Fidelity account if he wanted to participate. I hope he did. Because if you were participating, I mean, at this point in time, you're up 18 points. Now, the way the ARB works on this, I'll tell you behind the scenes the way the ARB works. Typically, you get the allocation, you go into the open market immediately and you short the stock to hedge yourself. So you're getting, because if you've been allocated,
right.
And if you've been notified that you did, maybe at this time you don't know what you've been allocated yet, how many shares. But if you do know, if you have got the notice and you've been allocated the shares, you typically say, okay, well, I'm getting 100 shares. I know at 160 on August 5th, I'm going to go to the open market right now, sell it short at 185. And obviously my allocation will cover my short in 4 days when I actually get the stock. The trouble of the matter is that it's difficult to find the locate, so you can't short the stock. So some of these mechanics are messed up here right now, and that's maybe why the thing is still trading 18 points above where the 160 pricing was. But there's other funny things materializing too. I mean, typically, like we say, these things trade down to the secondary pricing. But check out EIX from the other day, completely unrelated. Edison had a secondary. They priced this thing at 68.5. Yesterday, it didn't even give it a sniff. Opened at the lows of 70.40, and they ran at $5. So I have no idea if there was another factor involved there. I initially shorted it, and it wasn't coming in. This was in the after-hour session, so I'm like, okay, well, I've got to cover it because there's something else happening here. Anybody who was playing that game, short it and go for the allocation. It ripped, and it ripped to the tune of $4.5, $5. Now, Edison has nothing to do with Beyond Meat, but they both did secondaries. I've never really seen a secondary get ripped like that. So, just saying Beyond Meat doesn't have to trade down to this 160 price, because I think there's a lot of herbs out there that automatically assume, oh, it's 160, it'll trade down to 160. I saw it in my timeline. There's so many other mechanics here happening. It may not necessarily have to trade down to that 160 price. And that Edison trading from yesterday would scare me if I was just coming in flat out shorting this saying, oh, yeah, it's trading to 160. Nothing is for sure. That Edison was an eye-opener for me, EIX.
And also, I mean, you really, the options are so expensive too, right? The puts or...
Yeah, like you could play it that way too, but the premium you're going to give up is that worth it too? I mean, that's the other way, I guess. You could buy weekly puts, for next week and say, yeah, I'm going to get this allocation. First of all, the two questions are, do you, if you actually participated, which I did not, have you got the notice of how many shares you've got? Have you got that notice yet so you know how many? Secondly, or do you have the abilities to get a locate to short and to hedge yourself? Thirdly, are the puts too expensive to hedge yourself that way? Just because, in a normal situation, 3-4 days, maybe you can take on some market risk, but this thing's so wild. I mean, people want to hedge themselves because, imagine you get the 160 and the thing trades down to 140 on you. They would like to probably short it to hedge themselves. Now, in this case, the mechanics are so messed up because the borrow is difficult that I don't even know. I don't think it necessarily has to trade down to 160. That's my point.
You think, I mean, I guess the best case scenario would be if you were short the stock and you got an allocation. Right.
So the best case scenario is that you actually participate at this point. I mean, I'd be pretty excited if I participated in this and saw the stock at 177 here right now, not trading now. Like the thing is, when you participate in these, though, it's not like they're telling you, oh, we're going to give you 160. You say, do you want to participate in the secondary? It gets priced really after you've given your interest.
Yeah,
it's not like everybody wants to participate now. The stock at 160, turn around, sell at 177. So it was just obviously not that much interest to have to price it that low. It was 220 when it was announced. I mean, it was still wild from an earnings release. Earnings were only out for 10 minutes. But then they came out with the secondary, and the stock was priced at 220. It was at 220 when they announced that. So you think, okay, well, maybe they're going to give her 200. Maybe they have to go to 190 to find the buyers. They had to go all the way down to 160. That's insane. I've never seen
but Dennis,
60-point discount.
But Dennis, because this is an offering where the majority of the shares are coming from selling shareholders, they could be anybody. Couldn't they be insiders from the IPO? And they would be thrilled to sell at 160.
Yeah, well, that's what we're talking about, the buyers, though. So the sellers, we know who the sellers are, and obviously it's a company and it's the insiders.
Okay, got it.
Around. I'm focusing on the buyers, or the people who actually are participating in the offering on the buy side. So what happens is they send out, an indicator. You get these, that happen every once in a while, which is, amazing that they got around, because I didn't even. Anyways, I'm talking about focusing on the buyers, the people who actually get the indications from their brokers that there's an offering here. Do you want to participate in the offering? So you're not getting a choice to sell the stock. You're only getting a choice to buy it. Do you want to participate in the secondary or not? You don't know the pricing. You're just, you say, yes, okay, I will participate. Comes out at 200, and then you're like, it's 178. This stunk. So in some cases, you can probably get a feeler for where it's going to be. I'm sure they send some of those out, but I don't think anybody thought this thing was going to price at 160.
Yeah,
it wouldn't have had to go that low.
Yeah, I mean it's trading down 1896 at 177.55. Man, I don't know, I just hard for the stock to rally here, right? I mean between now and August 5th, I mean going back, I don't know. It's really a wild card here because doesn't this kind of muddy the technicals too? If you're a technical trader here, I mean, 160, it's supposed to be where it's priced at, and it's trading 177. So if it was a tough trade before, it's even a tougher trade now. You've taken out the low from earnings day at 183.50. So I'll use that as resistance. And interestingly, you're trading right on your July 22nd low at 177.76. Below that, the previous day's low was 170.77. So this thing will probably tighten up as the ARBs try and figure this thing out.
I would think by August 5th, you're going to get some selling pressure coming into it. But just that Edison, that EIX move, and bring up from that kind of scares me because I was out of the realm of normal. And like I said, I don't know if there's something else happening there or if they were just ripping it on the ARBs, saying you're getting this ripped on you, because there's not only people that are getting the allocation, they're going to sell it and they're going to lock it in. There's people who trade these things, saying they typically trade down to the secondary. I'm going to speculate that it's going to go down to that 68.50 price. I'm going to short this thing at 70 because there's going to be more sellers coming in, and they rip it up to 75. So that's there's some speculation involved here, a lot of speculation as well. ARBs trade around these numbers, and when you see it getting ripped like that, I just think, oh man, some ARBs got the beats there. So that not necessarily the ARBs, but the people who are speculating that it's going to trade down to the offering price.
Did you say fade logic last week? One day, wasn't that one of your rants? Fade logic.
Yeah, no, that's what EIX was. That was a fade logic trade all the way. And Beyond Meat, it could do something wild here too. So I'm just saying, just be careful. May not necessarily trade down 160. It's better bringing up a point that I talked about last night as well. It was interesting when this offering got announced. The stock was 189, and because it's got the first of all, because it can't get the borrow. And you have the alternative uptick rule in place. But the alternative uptick rule happens when a stock moves 10% in one day. If it moves 10%, you can't short it for the remainder of that day and the following day. Obviously, that happened on the prior day when Beyond Meat was 216 and went down to 183. So the alternative uptick rule was in place yesterday for the entire day in the after-hour session. So it comes out and it's 189 bid, and the stock can't go down. It wants to go down, and they're all piling on 189.01. You just see the offer grow because everybody wants to hit the 189, but they can't hit it because the alternative uptick rule. So it just sits there for like 20 seconds, 30 seconds. I actually see some of the 189.01s being bought. That's just uninformed traders because they don't realize the offering prices come out. And they're destroying buy orders. But that's, the argument that I've given against the uptick rule for a long time. It leads to market inefficiencies. That went on, it went down to 188, and then they're piled on at 188.01. It went down to 187. They're piling on at 187.01. So the alternative uptick rule does not let you hit a bid to get short. You have to get short on the offer. So that's why they're offering up that penny, trying to get short. Like they're literally trying. The exchange will reprice it, so you don't have to worry about that if you're trading. The exchange automatically reprices it. So the people who are putting in a 189 short are getting put on the offer at 189.01 because of the alternative uptick rule. So it sits there for a minute or two, completely mispriced, and then it eventually comes down to like 184 and 183. I was surprised it stalled out there and actually rallied a little bit from that point. But now we're down at 177, so we've come in a little bit more. But we're down 18 points because the offering price was 160.
All right, S&P's faded a little bit here. Still up at stake at 83.25, unchanged 82.25. A little bit of a slow melt here coming up here before the 8:30 imbalances. Let's talk about Jerry. I mean, Jerry really threw the market a curveball yesterday, Dennis.
I like the Jerry.
I didn't know
I had to think about that for a second. I've never heard him called. Has anybody else called him Jerry, or is this the only people?
I'm like, who's Jerry?
I know.
Yeah, now CNBC will start using it.
Yeah, they'll start using the calm Jerry. Anyways, he's talking Jerome Powell, but
we're on a first name basis.
Wouldn't it be Jeremy? Is Jerome Jeremy?
No, it's Jerome.
It's Jerome, but I mean this short. Jer. Call him Jer.
No,
I like Jerry, though.
I said Jerry.
Jerry is funny. I'll give you that. Okay, so Jerry did throw the market a curveball. Spencer, break it down.
Well, it seemed like the two words that people were most keyed in on are when basically what he called it, which was a mid-cycle adjustment. Those are his words of describing the reason for the cut yesterday. And it seemed like he was being pretty wishy-washy throughout the press conference, trying to walk the line of acknowledging why they did it, but also not trying to incite panic in the street. So I think the back and forth action you saw after the fact in the S&Ps kind of shows that no one was quite sure what to make of what he said.
I think that's a good synopsis. Everybody was very confused there. I mean, Leisman on CNBC was saying the exact same thing. It was very confusing, and he called him a poor communicator, which I'll go with that. I was kind of confused with the whole thing too. It sounded like the market interpreted it kind of like a one and done, where they're lowering interest rates and for this quarter, and we kind of are going neutral at this point in time. And the market, initially, we got a little lift, but then they started thinking about it, and they're like, this isn't good. And they hit the thing, and the Dow at one point in time was down 450 points. We'll say the Dow because it sounded cooler, saying it was down 450 points as opposed to saying the S&Ps were down 25 or 30. But anyways, at that point in time, he's on the conference, and I don't know if he knew what the market was doing, but he started backpedaling big time. And he said, I didn't say anything about, this just being a one-time event. He basically said that he sees it as a series, but did you have the commentary? I don't know, I'm butchering it here. But basically, he backpedaled from what it sounded like was a one and done to, no, we're going to be cutting more times. And that's when the market really started lifting.
Do you think that he has like someone quoting the spoos like in a mic?
I think he had an earpiece.
He has an earpiece, and they're like at a half, at a half.
The Dow's down 450. Get more dovish.
What are you doing?
What are you doing? Get more, talk more dovish. The Dow's down 450 now. Jerry, talk more dovish.
All right, Dennis, here, I'll read here. This is what he said at the press conference. Let me be clear. What I said was it's not the beginning of a long series of rate cuts. I didn't say it's just one or anything like that. When you think about rate cutting cycles, they go on for a long time, and the committee's not seeing that, not seeing us in that place. You would do that if you saw real economic weakness and you thought that the federal funds rate needed to be cut a lot. That's not what we're seeing. So
he just made sure to clarify that, hey, it's not a one and done. We're gonna.
But he also said it's not. He also said it might not be a lot. It wouldn't be a lot. So I don't know what. I really don't know what this means, honestly.
That's the confusing thing. And Leisman hit the nail on the head right on CNBC. He said he's a very poor communicator. I think everything was poorly communicated here. So, and the market was confused about it. That's why we're going to see chop. You're going to see whipsaw action, and always going to be head fakes. You're always going to see that stuff. You're going to see Amazon fall 40 points in a matter of, and it did. I mean, it was up at 1895 and went all the way down in a matter of like 20 minutes down to, what did we get down to? Like 1849. Yeah. So, I mean, these were significant moves with the Dow moving around 450 points, S&Ps moving 50 handles. It was significant. The market was confused. I think the market's still somewhat confused.
Can I just make kind of, it's not a super call on the market or macro or short this or that. One thing the market and investors do not like is indecision here. And we're right now, we are riddled with indecision. We don't know what the Fed is really going to do, right? They take rates down, they make these comments, okay? We have a trade war which has been going on for a long time. We don't know if it's ever going to end, right? And like Nick made those comments. He's like, what if it never ends? What if we just find out new ways to do business? He made that point earlier in the week. And then you got an election, a presidential election coming up in a little over a year. There's a lot of indecision out there. So I think you've expanded, you can't say you've ruined a bull market or anything. I think you've expanded to the top of the trading range. And I just think that there's, for me, I mean, I'm staying put. I'm staying with my long-term holdings. I'm not raising any more cash and everything. But my expectations for the market, just based on all this indecisions, are really tempered on this.
I don't know I don't know if anybody knows where we're going.
Hell no.
Sometimes you can get a pretty good feel for, we're making new highs. The bull train's full on. I mean, it's tough. it's a tough market to call day to day as opposed to calling 2 months from now. Some markets you can feel like, I got a pretty good feel. I think we're going higher. I'll make a bet with you and I'll think, oh, I think we're going to make new all-time highs by June. You get a feel. This market is really tricky, and it's tricky to call day to day and very tricky, and if not impossible to call where we're going to be 3 months from now. I mean, I go with the trends and say we're still, in a bull market here. We still look good on a lot of charts.
You can't argue that.
Terrible.
You can't argue technically.
Oil and retail, and those charts look absolutely terrible. But then, you look at solar and you look at stuff like that, and, that's a different story. So there's obviously sectors that are very strong, sectors are very weak. But when you look at this S&P chart and you see we had a pretty significant sell-off in May and a hell of a rally in June, and we look like we're stalling a bit here right now in July. The candle from yesterday is very ugly, but it's an indecisive candle too, because he closed kind of like right
off the lows.
So this market is indecisive. The Fed is indecisive. The trade war is indecisive. I mean,
that's what I'm just
saying. Market of indecisiveness.
Yeah. So, so that's it. So here we are. SPOs are now unchanged here, trying to stay green here on the session. Short-term target during the show here would be 29.78. That's mid-range on the session. So let's get.
I just want to say one more thing about this, and then we'll move on to actual earnings. But it's funny, we talked about yesterday. If you had the report in your hand, you wouldn't even know how to trade it.
Oh.
If you had told me that the market has wanted a rate cut for months, so if you had told me that they would get what they wanted and it would still go down, I would say probably not.
No, but if you knew that he was going to say it might be one and done, man, you would have had.
That's what really hit us.
Yeah, you would have had your.
We thought we all, like I said yesterday, quarter point and gonna remain dovish. It went quarter point. He kind of went to neutral. That's kind of what it sounded.
That's what I did, and I said that to you, Dennis. I said that to you.
You should be making the money on it, because that was.
Yeah, I don't even. Yeah, it was. No, that was the thing, and the semantics of it, or what did it. But we'll see. We'll see what happens. I don't know. That was just a wild day. Oh, the other thing is I don't know what economist out there or what forecaster was looking for a 0.5 point cut, and they put all their eggs in that basket, and they were looking for a 0.5 point cut. I think those people got their face ripped off. I know it was a lower probability, but I heard more chatter about a 0.5 point cut at this meeting. I mean, those people were super disappointed, right? Yeah. So a lot of different factors there.
Like if you were expecting the half and you got a quarter and a neutral stance, sounded like a neutral stance, you're like, sell, whatever, sell. Anyways, okay, so we haven't talked any stocks really here today. I guess we did talk Beyond Meat. There is 200 and some odd stocks that reported here today. I think I didn't write down the number, but a couple hundred stocks reporting again today. Some big ones last night. I want to go to a stock that I think I got this one right. I know I got this one right. I wish it would have been shorted. It's Qualcomm. Stock is getting the beats here in the pre-market. Give us the details on this report, Mr. Israel.
322 is the number of earnings reports we're getting today. So it is a busy day, one of the busier days of the season. Qualcomm, we'll do that. That was yesterday after the close. The EPS, they beat on that number, 80 cents versus 75 cents, but they missed on the sales, 4.9 versus $5.08 billion. Also gave some guidance that was light. Q4 EPS guidance, 65 to 75 cents versus a $1.08 estimate. Light sales guidance to go with that as well. So a miss on the Q3 sales number and light on both guidance numbers.
I mean, this stock has been a selling opportunity every time it's rallied. And I had it long as a swing. I had it long as an investment portfolio, not even as a swing. And I used that opportunity to sell it on July 1st. I got, near the top, like I said, that day. I think I sold like right around $80.
Yeah, I remember that to the T.
And then it went up and it had this ridiculous rally back on July 17th. And I said I would be fading this move. It was up at $79. I said it on the show that morning. I even apologized to Sean Udall because I know he likes it. I said, Sean, I'm going the other way. I don't like it at 79 here. I think there's too much headline risk. I was also giving the argument that I think Apple is kind of still at war with them, even though it's all over. And I think, when they can cut that contract, they will. That's all speculating on my part, but
Yep.
I just think there's a lot of unknowns here. We still don't know these rulings. There's headline risk. Josh Brown was saying on CNBC yesterday, he's absolutely right that the headline risk in the stock is incredible. Here's a stock getting the beats here again. So it was a great opportunity just a week and a half ago to sell when it got up to $80 there in the pre-market. Ridiculous. It's now $67 and coming in. I want no part of this. Not until it gets into the lower 50s. If it gets into the lower 50s, there's just too much headline risk for me to be in the stock.
Yeah, that was a good call on that one. You are trading down. You had a spike down. Wow, you're trading down significantly here. I think, and you mentioned it before, the whole Apple war thing. I think that's big. And I don't know. It just, when the stocks have those ridiculous runs off, off hearings and stuff. I mean, you could have gotten run over,
It was, that was Spencer. Enlighten us back to the 17th, because you were saying it too. I mean, it was like that reason that it rallied $5 that day. Well, it was something like government agencies were at battle with each other. I remember you analyzing.
That was the day that the DOJ had essentially asked on behalf of Qualcomm for the judge to pause in his enforcement of the ruling against Qualcomm. So the FTC had won that ruling. The DOJ then kind of came in on behalf of Qualcomm and said, "Let's hold on here for a minute." So
pausing for the ruling. This wasn't winning the ruling. They rally at $5 because they're going to pause the ruling, because the ruling's probably going to be bad.
The ruling is bad. The ruling already has.
Yeah, it was already bad, and they're trying to appeal it. Well, and just because they're appealing it and they're going to pause, going forward, doesn't mean it's still not going to be bad when it's finalized here. That's the wild card. And that's going to knock at that. If they actually do come out and, that a ruling is upheld, the original one, it's not good for the stock. I mean, at a certain point, valuation gets attractive here. I mean, it does have a 3.67% dividend, but I think at bare minimum, I think you could test the lows of May 29th, which is 64.76, and you start taking that out. And then you start thinking about, all the slippery slope, because it went straight up back there in April so quickly. You start thinking maybe you could give some of this back. But anyway, 65 would be my initial support level for Qualcomm.
Dennis, I don't even think you need me on the show anymore. I pull up.
I stole Joel's level.
Yeah, I have my exact cursor on my data window on May 29th. I was going to give that number. 64.76. The only thing you missed there, and that's why you're going to get a B for this, was the next day. The previous day's low was 65.24. So you got a pair of lows there. Just one low, is not as much. The fact that there was a pair of lows in consecutive days, that gives significance to 65. Then also, if you just look at this pre-market chart here, it just doesn't look like anybody's running out to buy this thing. It's hanging out near the lows of the session, step down seller. I mean, it's not at this point, it's not giving you any reason to think it's going to rally.
It was, and yes, we're going to have bounces, and yes, maybe they appeal and maybe they win the appeal, so there's still a wild card. So it's not like it's all downside potential here. I'm just saying there's a lot of unknowns. I still think, and Spinner is saying it too, I still think that Apple is, Apple basically lost that ruling to them and had to do, that, and obviously they agreed, but, Apple, is still, I think, holding a grudge against them. And I don't want to be long company. This is what I said back when it was 79. I don't want to be long company that Apple's holding a grudge against. And I believe they are holding a grudge against it. And yes, they have a contract with them right now, but I think as soon as they can, they're going to bail on that contract. Like they're going to fulfill that contract, which I believe was 2 years. And they're going to say, okay, Qualcomm, you're on your own now. So, I mean, there's a lot of unknowns here. There's a lot of wild cards, but this story here is not just about valuation. There's so many other factors involved.
And they already did that with the purchase of that Intel chip unit, right? I mean, that's kind of that was a little bit of a warning flag as well. That Apple doesn't make many purchases. So, all right, we got some earnings and we got some beats here. So let's be on a positive note. Let's do Verizon and General Motors.
All right, Verizon's report was mixed. They beat on the EPS, they missed on the sales. EPS $1.23 versus $1.20. Sales $32.1 versus $32.41 billion. They guided their full year EPS in the low single, or the sales growth in the low single digit range, and that's an okay report.
I'll limit my comments. I do have position on this.
Okay. Can I win a lunch if I guess what the position is? No, I'm not going to do it. I'm not going to do it. Okay. Let's see here. Since you've had the number, you've hit a high of 56.20. You're trading at 55.92. Just three, a couple days of selling off here from 58 to 55 and change. Before I went ex-dividend, you were up near 58 and a half. So I don't know, a little bit of a bounce here. I'd be looking to see if we can take out yesterday's high. Ooh, that's way up at 56.72 here. So I'd be a little bit cautious on the long side until we took out 56.72. If you want to make sure it's going to hold the gains for the day, unchanged is 55.27, along with the low from yesterday at 54.92. So that's my take on Verizon.
All right, where'd you want to go next?
You want to slip in balances here, or you want to do government motors?
Let's go look at imbalances. They're pretty small. I don't really see anything jumping on me. Pfizer 79,000 buy. It's ex-dividend today. Procter Gamble 80,000 to buy. That stands out. Just a big number for PG. General Electric 128,000 to sell. That gave back. That GE. We should talk that because that opened right at resistance and just puked. So we talked about it that if it didn't open and get over that 1080, 1075, 1080 area, it could be in a world of pain. And here it is. It opened right at resistance. It could not open over the resistance, even though it was trading above it in the pre-market.
A lot, yeah.
Went straight down. So that still remains just enormous resistance for General Electric.
Okay, all right, and so we did that. Let's do General Motors.
All right, GM reporting this morning Q2 adjusted EPS $1.64 versus $1.43. Estimate sales 36.1 is pretty much in line. A slight miss on the estimate there, $36.1 billion. They guided full year EPS at a pretty big range, $5.91 to $6.75. So that's in line with the estimate there. So overall, that's a fine report.
They make some money. Trading
been
up.
Hot. The stock's been hot. It's been hot for a month and a half here since the low in June at $33. We're now up at 41. Now, that being said, the easy money's been made in this. We've come up here multiple times in a 42, 44 area, 41, and we continue to fail up here. So, you start to get an overhead supply issues when you start getting 42, 43, 44. So it's a nice report. I just don't know if I'm jumping on board here.
41.50 was a monthly high in March of this year. We are trading above it, so I'll be on the breakout side here. We hold this 41.50 area pretty thin above that 41.50, so that's just the big number here. Trading above it, the actual pre-market high is 41.84, and since we haven't been at 42 in a while, I don't know if you can see that far in the book, Dennis, but just nice round number. Nothing.
I've been so busy, I don't even have my book open here yet.
Okay.
So,
okay.
JV's 42. Check it.
I just wouldn't want to buy this thing at off the open at 41.60 and seeing it print 41.40, 41.30. So looking for follow through for GM. Not helping out Ford's much. Ford's down a penny here at 9.52. Really hasn't been able to recover from its earnings report.
Not at all. I mean, maybe it can help. This GM can help it, but Ford has not recovered whatsoever. We're 4 or 5 days after the report here, and it's still sitting down near the lows. So we'll see if this GM rally if it continues or if it gets faded. Sometimes it takes a day or two for the real tell too. Sometimes we get a little follow through. People get excited. So I don't know if I'm just jumping on GM here.
All right. Spoo's hanging out unchanged, 29.82, trying to stay green on the session. Spencer, you wanna go get our guest?
I do. I want to bring on our guest right now. As I mentioned at the top, this is a different sort of guest than what we usually have on our show. Her name is Yvonne Shore. She's a longtime listener, first-time caller, and she's a trader. She's a new trader, and why she started trading is very interesting. So, Yvonne, good morning.
Good morning. Hello, all.
How's it going this morning?
It is pretty darn good here in Atlanta, Georgia. How about Detroit?
Well, we're recovering from hosting 2 Democratic debates, so we're getting all the politicians out of town, and things are going to get a lot better. But I want to talk about you. You have a very interesting story, and I'm going to put the link to the article we wrote about you in both our chat rooms here in a second. But why don't you walk us through, first off, give us your general quick life background, and we'll get to sort of what happened last year.
My trading history really started back in, let's say, 2016. I met a friend on the internet, and he was into the marijuana stocks, and he was going to be giving instructions. And so I decided to take the plunge. I had always wanted to be in the stock market, only because on Lake Cumberland in Kentucky, there were all these beautiful yachts. And I asked somebody one day, who do all these boats belong to? And they said, people who made big in the stock market. And it was at that time I thought, you know what, that's going to be me someday. So I took $1,200 and went to school with Daniel for about 8 weeks, and sort of learned some of the basics. But I've owned like maybe about 55 or 65 marijuana stocks. That was in the beginning of the marijuana legislation era. And some did well, some not so hot. Then I veered off in another direction and decided to do dividend harvesting. That went so-so. Then I decided, well, let's get into shares. So-so. Then in 2017, November 22nd, I was still working full-time during this whole time. I was working one day, and November 23rd, I was not. I went through a couple of months of solid testing on my lungs, excruciating tests, and come to find out, number one, I could no longer work. Number two, I had 3 lung diseases. And number 3, as of January 26, 2018, I was given till the end of the year to be here. And I was just in shock. So a few weeks, you can understand that I just sat in my rocking chair and rocked and had my own pity party for a while. And then one day I said, what the hell, girl? You get your hiney downstairs at the computer and you go find something to do.
And so you did something that is extremely interesting, is like you said, you got online and you had found these stem cell treatments in Nashville that could potentially help you.
Yes.
But you couldn't afford them. They weren't
Not
covered
at $12,000. No.
Not covered by insurance. So what you do? You thought, I'm going to trade my way and get this therapy. So talk us through that.
I did. So sometimes God works in mysterious ways, and I was just what I say, piddle farting around on the internet, on Facebook, and I landed upon a what at that time it was called Joe Stocks Group. Since then, they changed the name to Easy Options Trading. At the time, that was like February 7th or 8th of 2018. He was going to start a class of stock market basics and fundamentals. And I thought, this is it for me. So I joined, had to pay a nominal fee, just a slight fee, and started learning the stocks. At first, we were buying shares and learning the basics. And then one day, end of March, first part of April, he said, we're going to switch to options. And been trading options ever since. I asked him, please, can you help me one day? I need $12,000 in a matter of a few days. I need to stay alive. I love my life. My life is beautiful. And I certainly don't want it to end. So he said, how much money do you have? And I said, I can get my hands on $2,500 right now today. He said, perfect. And he showed me the ropes, how to make money quickly. My strategy still remains the same to this very day. I am probably a true scalper. I trade off the support and resistance. And his teachings were, you get in, you get out real quick. You learn the blue chip stocks. They're the best. Don't ever trade penny stocks when you're doing options. And I have held true to his teachings, and his tutelage has been very helpful for me. Unfortunately, he passed away in June, And the class still goes on. I bowed out and I went on my own and teamed up with Jeremy Newsom, which I found on your pre-market prep, and read his book from cover to cover. And I guess that was the beginning. From there, I went to other groups on the internet. I like to go to X-Trades. I like to go to, it's called Thanson, and a few other sites on the Facebook.
Yvonne, let me break in here for a second. Let's just talk about that run that that you had with a small amount of money. Turning that into a larger amount of money to pay for those treatments. Now, scalping's a tough way to do that. Was it the time in the market, the options? How did you parlay that? And then also, if you have that kind of success doing things, is it hard to peel back and not swing that kind of bat?
At the time, the market was different, and this is something that you and Dennis and probably Spencer too can tell people out there. I call it a fickle high school girl. The markets change. They change their mind. They change direction. It changes constantly. As fast as you and I change our underwear, that's as fast as the market changes. And back then, the market was different. It reacted different. Blue chips, Amazon, Google, Netflix, they just weren't as high priced as they were now. You could go in and buy Amazon. I think I usually bought like about maybe 5 or 6 contracts of Amazon and would trade quickly. And I'm talking a matter of maybe 3 to 7 minutes. You're in, you're out, and you have made your bundle of money. You walk away and you go find something else if that's what you want to do. I prefer the markets from 9:30 Eastern Standard Time until about maybe 12:30. To me, that's really, really good. So then I go have lunch and then I come back about 1:32-ish and you can trade again. Scalping is totally different than what you all do with your shares, and you do long-term, short-term. I only rent the options. I'm in and out quickly.
What are these weekly options that you're trading here? Or
I'm just changing my strategy as we speak. As of Monday of this week, I decided to buy options maybe 2 weeks out instead of this week. So I would start on Monday, which was July 29th here. And up until today, I will buy the option for August 2nd, which is tomorrow. This afternoon, if I do trade and want to scalp quickly, which I normally do in the afternoon, I try to buy X. I'll go 2 weeks out now and see if that doesn't help any. We'll just see. I'm going to change my expiry date, see what happens.
So Yvonne, did you tell anyone that you're going to fund these treatments through trading?
Many people.
And what they said?
There's also another gentleman. I believe he lives in Connecticut. His mother has multiple sclerosis, and he too is trading to help his mother fund the stem cell treatments so that she too can live longer and live a better life. Stem cell treatments are very, very expensive.
What did people say when you told them that you were doing this?
Shocked.
You could have just as well lost money.
Pardon me?
You could have just as well lost money and have been worse off than you were before.
That's the name of the stock market. You're in to win or lose. You have to be passionate about the stock market. And I'm here for a career. I'm here to make money for my stem cell treatments. My ultimate goal is to make enough money so that I too can help other people. There are other people that could live longer. And I would love to give them thousands of dollars to keep them alive.
So
our government won't.
You're still able to fund your treatments as of today?
Yes.
With your trading?
I just had another, my third stem cell treatment in June. And that's when my daughter and she trades too.
Robin Steckel, she's in the YouTube chat.
Yeah.
Give a shout out to Robin. We got your
Robin.
mom on, Robin.
We hooked up with Jeremy Newsom after my treatment, had dinner, met his lovely fiance, Ashley. And then we went and traded with him the next day. We learned so much. And for my birthday, my daughter Robin gave me free classes starting today. So I'll be in Jeremy Newsom's class. I want to learn his technique. You know, every trader out there has a different outlook on the stock market. They're in it for different reasons. You should really, as a trader, open up the floodgates and learn everybody's strategies. Pick a little bit that you like from each person. Not everybody can trade shares like y'all do and Jeremy. And there's many of us out here who just like options. So pick and choose a little bit of everything from everybody, and then put it all together and do your own trading plan and be consistent. Absolutely be consistent. And one of the things that I tell people in our groups is a rule from Dennis. Yes, your Benzinga pre-market show has been most educational. Do not look at your losses as a failure. Look at them as a win, and then tear them apart. Go back and what I say, look under that hood. What did you do wrong? What will you not do going forward? And the biggest thing in option trading, you sit there and you think, I just know the market's going to go back in the other direction that I bought. And you sit there and the next thing you know, you've lost a few $100s. So there's all kinds of trading rules and you got to keep at it, but don't feel like a failure when you lose. Just don't. Just wake up the next morning and go for it again.
And Robin, how do you, I know you've been listening to the show and stuff. Do you, now the options are not open until, obviously until 9:30. How do you take the information that you get on the show? Do you create a PMP watch list? Do you have your own strategies? And when we talk about, let's say, I know you like to trade Bank America options. Do you say, yes, this concurs with what I'm thinking? How do you make use of the information on the show besides, being entertained with our wit and humor?
No, Joel, I don't know how entertaining we are.
Well, Dennis's hair is very entertaining.
Oh, look, I got this haircut just for you, Yvonne. I got this just for you. I knew you were coming, and I got a nice haircut here.
God, I'm always in detention. Yes, I have found that when you give alerts, I write them down. Now, today you've been talking about, for example, BYND. So I'm going to write that down. And after I get done trading Bank of America here, because I'm in calls and puts today to cover my little hiney, I will go and look. Now, the next thing I go to is FinViz, because I have found that the stocks that you talk about during your show are listed in the major news. And it will give, yep, Joel and Dennis said that stock's going to go up. And guess what? It went up. So in the afternoons, if I'm looking for something to trade and I just don't want to walk away from my computer yet, I will go to FinViz. I will match up what they say to what you alerted on your show, because I've written the stocks down. And if I have enough money, I will jump in and I will trade the options. Your show is very helpful, whether you know it or not.
I don't know if we always know that. Dennis, I believe you had a question.
No, just so, and obviously you're doing a lot of different strategies here, but what about like going forward here? So you're working with Jeremy now. You're obviously doing a lot of things. And how are your treatments going as well? I just want to ask you that as well.
My treatments are going well.
Excellent.
They have an exercise program that I can sit and do here while I'm sitting in my chair trading. The food, I've always been a big eater, even though I'm tiny. They tell me I'm tiny. I'm a big eater. I eat much more than my husband ever thought about eating. So when you have treatments, for lung diseases. They put you on a diet. Maybe BYND would be good. But anyhow, there are certain foods you cannot eat. Fruits, you guys probably eat bananas and oranges and apples every single day and think nothing of it. Well, us people with lung diseases, we're not that fortunate. Strawberries and blueberries. As far as meats, it's pretty wide and pretty open. Leafy green vegetables is fun. Don't like broccoli, and I won't do broccoli. I had to do avocados until they were coming out of my ears, and now I can't stand them.
Wait, so Yvonne, bring it back to the trading here. Are you trade like the same 5 or 6 stocks all the time, right?
Generally, yes.
What are those?
Bank of America every day. X every day. The past 2 weeks, I just switched and started trading JD. So those are the 3 main stocks. I have a watch list here. I do look at others. Square, I might start trading next week. QQQ is always a good one. If you got an itch in the afternoon and you want to trade something, SPY or QQQ, those are the ones that you trade. So yes, I make enough money to continue my treatments. The Nashville Lung Institute does work with people. So it's a great thing. What I do want to tell everybody, no matter what your ailment, if you have parents that have lung disease, heart disease, whatever it is, maybe they have bad knees, bad hips, do look into stem cell. It's well worth your time. Even though the government has not okayed a lot of stem cell treatments, there's different kinds, by the way, and I had IV. Go for it. Please help your parents. Please help your friends and family get the stem cell that they need. They won't be sorry, and neither will you.
Yvonne, I want to thank you for coming on with us today. When we first heard about your story, we were all very moved by it, and I've enjoyed our few conversations. And I hope your trading goes well. Hope your treatment goes well, and I hope your health stays okay.
It will help me maintain.
Okay. God bless you, Yvonne. We'll be talking to you soon. Okay.
Love you guys. Bye.
Thank you so much.
All right. I told you it'd be a little bit different than what we usually have.
That's a nice story.
But sometimes it's nice to remember that
what she's doing and her treatments are going well.
Yes, and there's more to life than the Beyond Meat offering this morning.
For sure. So that's a nice story. I was glad to have Yvonne here on today. So that's excellent, and I'm glad her treatments are going well. The markets are not going as well as they were about an hour ago here because we are starting to leak significantly. Like Joel said, we've went scratch. We're slightly in the green here right now. Imbalances are mixed. This market is just, I'm just going to say this is going to be a day that I don't think anybody can call. Beyond Meat has come in significantly. So yeah. The ARBs are doing their work here. They're either finding locates or they're doing something to bring this down. Because like I said, typically these do trade down to the offering price. I was challenging whether it was going to do that or not because it was 185 last night for an hour after the offering. And then this morning it was in the 180s here too. But it is starting to come in. I don't know if it's going all the way down to the 160 because of the mechanics in there, but this is still not good news. I mean, when you get these secondaries and they got to price it all the way down to 160 to find the buyers for it, is telling you that, there's a lot of institutions that are just not interested in this. So it's still just a retail story. It's a buzz. I mean, the buzz is significantly off here now because the stock is so far from its highs. 239 now, you're down at 170. You start thinking the 160 here. It's not. I think the all-time high is in. That's what I'm going to say. I kind of hinted at that the other day. It tried to get back up there, but I think and obviously it's easy to say we're 70 points off of it now.
Right.
But I thought it was in before when we had that blow-off high up at 200. And then it started coming out. I was like, okay, this story's going to end. And it just wouldn't go away. So it's impossible to say whether this story is end, but you got insiders selling now. It kind of feels like GoPro. They had to really price it low. You got a lot of people caught in this thing here now. I think rallies to be sold in BYND.
And also coming to your local Burger King, Impossible Burgers. Impossible
Yeah,
Whoppers.
don't forget that. I wanted to bring that up earlier.
Did they just announce that?
I didn't quite get a chance to between you and Dennis, but yes, that was announced this morning.
Oh, competition.
Let me find the exact time. It was announced at 6:02 a.m. this morning, and that was when the selling started this morning, at least.
So there's another catalyst for the selling here too.
Nationwide Impossible Burgers coming to Burger King.
Who makes Impossible?
Impossible Foods.
It's a
Their own
private company.
Yes.
Yep.
But you know Tyson's going to come out with something. I mean, this was such a ridiculous. The pricing was so ridiculous, and everybody knew it was ridiculous. It's just a matter of, the mechanics. When you got 50% short interest, you can't find a locate. You get buy-ins happening. You get so many other things. But, from a valuation perspective, this never made sense. And that's why I've said on the show multiple times that I think when I look at this a year from now, I think it's under $100. I don't know the path to get there. And obviously the path took some turns that I didn't expect. But I just think, there's people that are literally buying this and sticking in their long-term portfolio. And I don't think you could buy a worse stock for your long-term portfolio.
All right, we only got 4 minutes left here, and you want to pick it up here on the earnings parade. I did not see any significant ratings changes, Dennis. You might have something more in front of you, but
They were pretty quiet. Spencer, can you just break them down?
Just a couple. IBM got reinstated this morning at Morgan Stanley at overweight. They announced a $170 price target. That's a reinstatement. So essentially an initiation there. RH caught an upgrade from Bank of America to buy. Spotify upgraded Loop Capital to neutral. That's kind of it from as far as upgrades. And as far as downgrades are concerned, there weren't too many that caught my eye. I'm going through the list right now. No, don't really see any that are interesting this morning, as far as big names, big firms, or sells, or crazy low price targets. So just quiet in the way of ratings. That they're just trying to sort through the earnings mess.
And balances are still mixed here. GE 154,000 to sell, Pfizer 110,000 to buy. Again, Pfizer's ex-dividend. Procter Gamble's a little smaller, 61,000 to buy. I know AT&T has 177,000 to sell, which is interesting because Verizon's trading higher here this morning off their earnings report. They're mixed though.
Let's do TWLO earnings here. TWLO reported yesterday after the close. Q2 adjusted EPS 3 cents is in line. Sales $275 versus $264 million. They guided their EPS for the current quarter in line at 1 to 2 cents. Sales also in line. Actually, sales a little higher. The high $280 million range is what they said for the current quarter sales number. So good guidance.
Dennis is going to say, well, it's a good stock. It's been an uptrend. They hit it. You had to put a bid out there. You got down to 127.05, and now you're back trying to get green on the session. So with that kind of range, I'm just going to keep an eye on the close, 139.11. See if we can clear that area, or excuse me, 136.11. That's going to be your area of control. Hold that. Maybe get a chance to sniff yesterday's high, 142.90.
Let's see. Were there any others that I really want to hit on? We got TWLO, we got Qualcomm, we got Verizon. Hey, let's look at Yum real fast. Yum had earnings as well this morning. Q2 adjusted EPS 93 cents versus an 87-cent estimate. Sales 1.31 versus $1.28 billion. So they beat on both Q2 numbers for Yum Brands.
All right.
Stock's been very resilient, very strong. I believe you're making new all-time highs here this morning on this print. That being said, it's starting to leak a little bit.
Yep.
So always be cautious. People come in and they look and they start looking at intraday charts and they look them at 9:30 and it doesn't tell the whole story. That's why we started pre-market prep in the first place, was because we believe that the pre-market trading can often dictate where a stock is going to go or what it's going to do. If you look at the pre-market trading in this, it tells you a completely different story as if you were just coming in and looking at price here right now and saying it's breaking out to a new all-time high. Because here is a stock that's got hit, then it spiked way up and is now starting to leak. So when those stocks start to leak, just like General Electric the other day, yesterday, it tells a different story. And that's why we were concerned about GE, was because it was significantly off of its highs. It was starting to look like it might not even open over resistance. And then what happens, it opens that resistance and falls. So I don't know what the Yum story, but it's not as bullish as you'd think if you just came in and this thing was rising the entire pre-market, because it's been chopped around and it is starting to leak.
Great point there, and I just want to use that with what we do. That when I'm looking at this, I see a 117.40 spike high there. That was above the all-time high. Big red bar there. So on the last 15-minute bracket. So to me, it's going to have you already got some people caught up above there, right? So if they get it back now, 117 even starts to come into play, 116.90. So the sellers have stepped down there. The top of yesterday's range comes in at 113.50. So got a little bit of a ways to go to a gap fill. You certainly don't want to see it go red on the session. That close was 112.52. Let's think in LRCX, because these chips have been hot. That reported too, right?
It's bounced off the lows. So a little bit different story here too. It looks weak, but it was really weak here earlier.
LRCX numbers from yesterday, Q4 EPS $3.62 versus a $3.42 estimate. Sales $2.36 billion. That's in line. So EPS beat inline sales.
Boy, I mean, it dipped and now it's back up here. I'm just going to look at the range from yesterday for clues on this one. 208.61 is your closing price. You are trading below that now. So I'll look at that as resistance for now. And if you're looking for support on this thing, if you really start to go into decline, 202.87 was your July 22nd low. And you did had a quick spike under 203. So we'll look at that as potential support. Triple D, we kept you a couple minutes late here. And any final thoughts today here? Just remember, we have jobs number tomorrow.
Expect chop all day. Expect
There
chop. I wouldn't be chasing anything today. I'm more of the fade trade here today. You get an initial stocks start moving one direction. Might be playing more a contrarian view here, because I think you're going to get a lot more chop here today, especially ahead of the jobs number.
All right, that'll be it for today's show. Thanks to everyone in our chat, both on YouTube and premarket.benzinga.com. Thanks to our guest today, Yvonne Shore. Please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Catch our podcast available anywhere podcasts are available: iTunes, SoundCloud, Stitcher, TuneIn, or just rewatch the show on YouTube. Everyone have a good rest of your day. See you on